Okay, bear with me as a fairly inexperienced webinar host. I can assure you that all of our panelists and presenters are well experienced and have a rich variety of information to share with you today. You may have heard that Sacramento has been setting records here recently. We had 212 days without measurable rain from March to October of this year. And 8 days later, we broke an all-time record for one-day rainfall in the Sacramento area. We had over 5 inches of rainfall in Sacramento on Sunday. So we've broken 2 world records here in Sacramento, and today I'm hoping to break the third, which will be most information-packed single-family symposium in the Western Hemisphere. So this is a big order, but I think we're up to the job. Let me tell you just a little bit about CAL-ALHFA. We were founded in 1989, primarily as issuers of mortgage revenue bonds, building a lot of high-rise senior apartments that you see dotting around our major cities. We changed our focus as financing tools changed. Of course, when the tax credit program came in, we became avid first users of the credit program, and we also participate in the other state programs that are offered to folks who are interested in developing affordable housing. CAL-ALHFA is unique in that we have a very robust single family program, which is a topic that we're going to be discussing today. We also do a lot of multifamily activity, and our focus is unique. Our focus is to provide input and leadership from local agency point of view. There's always a lot of tension between state mandates and local control. CAL-ALHFA likes to think that we're very nicely balanced on the knife edge between those two points of view. And we do provide local impact, local comment on impact that state regulation and federal regulation have on the implementation of affordable housing programs at the local level. That's our unique point of view. And given that unique point of view, I'd certainly like to encourage all of you, particularly local agency folks who don't already belong to CAL-ALHFA, to do so. We have a membership form on our website, as well as program information and background materials for today's symposium. I'd like to thank the folks who are behind the scenes making all of this possible. We have Sherry Gaillard, SLG Designs, who's been with us for many years and is truly the brains behind the whole affair. We have Becky Jackson with Innovative Housing Opportunities. IHO is a board member of CAL-ALHFA, and their executive, Rochelle Mills, has been a spark plug in the development of affordable housing programs in these webinars since the beginning. So those three are the folks behind the curtain that have made all of this possible, and I cannot thank them enough. I also wanted to let you know that we have signed a contract for the 2022 CAL-ALHFA conference. It will be a 2-day affair, October 26th and October 27th at the Sacramento Downtown Holiday Inn, which is located right in what we call DOCO, where the Golden One Center is, and it's going to be a jumping affair. There's lots of activity going on in Sacramento during the holiday season, kicking off with Halloween. So you'll certainly be getting more information, but it's a go. We've signed the contract. We are happening October 26th and 27th in Sacramento at the Holiday Inn 2022. This is the first of at least 4 webinars that we are going to be doing in 2021-22. This one has an emphasis on single family programming. Tomorrow, we will have our annual meeting, which is a review of state programs and policy, kind of setting the table for what CAL-ALHFA wants to put on its legislative agenda. And then we're going to have a couple more webinars that are also devoted to single family development, minority ownership and wealth building, just a variety of of topics that are of interest to single family customers as opposed to the larger multifamily customer base that we have. We're also contemplating doing an informational webinar about a new rental housing program that has been introduced by some joint powers authorities. There's pros and cons to this program. It's getting a lot of attention locally, and we feel that CAL-ALHFA has an opportunity to provide some nonpartisan information on the pros and cons of these rental programs for middle income households. That all said, I'd like to turn the presentation over to my friend and colleague, Wendy DeWitt. Wendy is the president of CAL-ALHFA, and she's also vice president for policy and preservation at the San Diego Housing Commission. Good morning, Wendy.
Good morning. Thanks, Mary Ellen. Yes, we do have quite information-packed morning or half a day. So for the most information-packed webinar in the Western Hemisphere, I'd like to give you a little bit of a preview to kind of set the scene of what we'll be doing this morning. Home ownership is valued for the stability it provides families, but as time goes by, it becomes harder and harder to achieve what is considered home ownership for the average household, much less the lower income households. So our first panel will introduce innovators in down payment assistance with new ways homeownership is being promoted in communities. Then next, we'll have a panel of experts to discuss building minority wealth through homeownership and the positive social and economic outcomes it produces. The second half of our morning will focus on advancing rural broadband, highlighting the need for access to high-speed broadband service, especially in these challenging days of working from home and educating our children from home. And then finally, another challenge to homeowners is catastrophic wildfires and the loss of electricity that goes with it. We'll learn about closed loop pump storage. So we have a lot to learn today from our panel of experts, but before we get started, I'd like to recognize and thank our most generous sponsors for the webinar today. Our title sponsor, Golden State Finance Authority, that has been with us for many years and also sits on our board. Thank you so much. I'd also like to thank our gold sponsors, the San Diego Housing Commission, R4 Capital, Federal Home Loan Bank of San Francisco, and Life Steps. Our silver sponsor is Innovative Housing Opportunities, and our bronze sponsors today are the California Housing Finance Agency, or CAL-ALHFA, Mogavero Architects, and a new sponsor for our webinar, Notification Maps. So I think we got the announcement at the beginning of the session that we are recording. So I just wanted to make sure everyone knew we're recording the session today to make it available to the attendees afterwards in case you want to look back for reference or notes or anything you may need to use it for. So without further delay, let's get started, and I'll turn it back to Mary Ellen.
All right, thank you. Thanks again to our fabulous sponsors. This CAL-ALHFA really wouldn't be possible without the sponsorship and the support that is given to us by our sponsors and our members. So can't emphasize how grateful we are for that support of the good work that we do. Craig Ferguson is going to be moderating our first panel. Craig is an official with the Golden State Finance Authority, GSFA, which, as Wendy said, has been one of our longest lasting members. The GSFA has changed names 3 or 4 times, but they've always stayed loyal to their participation and membership in CAL-ALHFA. GSFA develops and administers programs that provide a source of financing for residential home purchases or refinances, commercial and residential energy efficient improvements, multifamily housing construction, and rehab projects, and city and/or housing county infrastructure improvements. GSFA has distinguished itself as a leader in housing finance in California for over 2 decades, helping over 83,400 individuals and families purchase a home. GSFA has provided more than $634.4 million in down payment assistance and participated in financing of $1 billion in energy efficiency improvement projects. Obviously, GSFA and Craig are well equipped to conduct this next panel. Take it away, Craig.
Thank you, Mary Ellen. And thank you everyone for joining. It's appropriate kicking the first panel off with innovations in down payment assistance. As Mary Ellen said, Golden State Finance Authority has predominantly been focused on down payment assistance, and since '93, we've assisted over 84,000 families. The biggest hurdle to home ownership is down payment assistance, and this is not just a California problem, this is a national problem. A couple of months ago, the Wall Street Journal had an article talking about, first of all, the median price of a home on a national level is at $350,000, which doesn't seem too high for California, but it's the highest it's ever been on a national level. And in that same article said the biggest hurdle is down payment assistance. And there are many down payment assistance programs. You'll learn some about them today. And as many as there are, there's still not enough down payment assistance out there for the low to moderate income home buyer. So today we've got 2 speakers. We have Joel Singer and Sean Moss. And I'll introduce Joel as the first panelist. Joel, for over 30 years, has been CEO of the California Association of Realtors. And he's been overseeing the association's objectives, business development, strategic planning, legislative policies, and creating products so that the real estate professionals can succeed in today's changing real estate market. Joel, you've got a long list of accomplishments. I could probably take up the whole panel reading these, but to summarize a few, Joel is a visionary, leading CAR into the digital era by creating California Living Network in 1996. This is one of the first web-based real estate information services, and you can see where we've come so far since then with web-based real estate listings. He led the effort in defeating a bill which would have eliminated mortgage interest deduction for second homes and defeated a ballot measure that would have repealed the Costa-Hawkins Rental Housing Act. Singer joined CAR in 1978 and previously served as its chief economist and headed the association's public affairs department. I will leave it there and let Joel take it away, and then I'll introduce Sean after that. Thank you, Joel.
Thank you very much, Craig. It's a pleasure to be here. This conference is extremely important because California is at a decisive crossroad in terms of its ability to deal with housing, in particular home ownership housing. And I think it's important to understand just how serious the situation is, because for the first time, if nothing more dramatic than for the first time in 120 years, California is losing population. That loss of population, when we look at public opinion surveys, is tied directly into the cost of housing. There are other considerations, obviously, the COVID environment is one of them, certainly. But the fact of the matter is, we have been talking about housing crisis in California, home ownership crisis in California, quite frankly, for the last 40 years. And what was once the Achilles heel of the California economy has now become a very critical factor in terms of the state's growth, survival, and the quality of life for our citizens. So with that, I'm going to talk a little bit about this background. Mark Farfel is going to run a slideshow for me. So Mark, can you display the first slide, please? Okay, well, then let's.
It's up, Joel.
I'm having technical problems here, and have you given Mark access as we requested? Okay. Let me just say, without using slides, which is going to be very difficult, that the situation, as I said, in California has now reached a critical state. If you look at our housing situation at present from a homeownership standpoint, the market is characterized by an absolute shortage of listings. That shortage of listings is so problematic that prices have now reached a median price of $800,000. That median price is survivable in the sense that interest rates are exceedingly low. Our affordability figure are now at levels we have not seen since the Great Recession in terms of the scarcity of affordable housing. And as a result, even with interest rates low, we have the access situation that I talked about. The aspects of this that are most important to us deal with homeownership and wealth accumulation. The real net worth of Californians is clearly dependent on their role as either homeowners or renters. If you look at renters, per capita net worth is a mere fraction of what it is for homeowners. And the gap is even more significant when you look at it from a racial standpoint. So getting now to the situation here from the standpoint of the housing gap, you can see that Black homeownership in particular lags white homeownership by nearly 30%. That number is unchanged since the 1960s and is depressingly low and needs to be rectified. I know that's going to be a topic that is discussed later in this session. And,
well, I see your PowerPoint up now. Do you see it?
Yeah, I'm seeing it now.
Okay, perfect. Just wanted to make sure. Thank you.
Yeah, thank you. That situation obviously is going to be discussed at some length here. The next slide, please. As I said earlier, tight supply has put upward pressure on the marketplace. We're at over $800,000 median price, which is unheard of. And the fact that it has been fueled by low interest rates, but the threat of higher interest rates are going to make the affordability situation even more adverse. Next slide. You can see over 3/4 of California households cannot afford to buy a median priced home. Obviously, if you have a home, this is not that relevant, but that number of 23% is back down to about 2008 levels. And what's particularly precarious is what happens if interest rates go up. Even a slight normalization of interest rates will reduce us to affordability levels never seen before in California. If interest rates rise to 5%, you're looking at single-digit affordability for homeownership in California. Again, we expect the 2022 numbers on out-migration to be even more dire than they were in 2021. And obviously, further reductions in affordability will accelerate that trend. Next slide. And it's not a localized problem. It is a problem everywhere. Even the most affordable counties lag well behind the US median of 50%, with a couple of exceptions. And the fact of the matter is everybody's vulnerable given what's occurred in terms of price increases and the lack of supply throughout California. Next slide. The median income, the minimum income to buy has increased nearly $100,000 since 2012. That's an enormous increase given stagnant incomes. You can see how these numbers look when we compare 2012 to 2021 for California as a whole. It's almost been a tripling in the amount of income needed to purchase a home. Some market areas are clearly worse, but if you look at the most affordable of the large markets areas in California, the Inland Empire, you can see a huge increase again of 167% just over these past 7 years. And again, that's predicated on record low interest rates. Were interest rates higher, the situation would be even more dire. Next slide, please. We've talked about this a lot, but you can see that mortgage payments have been mitigated again by record low interest rates. If you go to that 6.5 scenario of 2006, which is unlikely, we don't see that occurring in the next 3 to 5 years. You're talking about interest rates at 6%, affordability rates at 6%. Next slide. And as I said earlier, this is a bigger issue for people of color. The affordability gap by race is very, very dramatic in every metropolitan area in the state of California. This too is disappointing. It is to a large degree engendered by income stagnation. But as you can see, it's a very significant income gap on the order of 25%, 20 to 25% for both Latinx and Black California households. Next slide. Again, income equality is part of this gap without a question, and that means that specialized and targeted programs are very well merited. This is a big policy discussion we're having in Sacramento, and it's one that needs to occur. Next slide, please. The gap could even be larger, as I said earlier, and the down payment gap is enormous as well. When we look at the down payment, and that's going to be one of the topics here, we talk about aiding people and getting them into homes. It's no longer about interest rate reduction; it's about initial costs and down payments. Next slide. Again, you can see the impact on home ownership, as we said earlier, by ethnicity. Next slide. Down payment and personal finance are factors that delay many in buying. This is from a survey we run annually. People are looking for improvements, and there's no real buying urgency. But the fact of the matter is that this is one of the things that we also see in surveys when we ask people who've migrated out of California why they're leaving. Housing costs, both rental costs, but particularly access to home ownership, drives so much of that out migration. Next slide. And first-time buyers in particular do not stack up well. No surprise here to repeat buyers. Lower incomes, obviously lower equity positions, far lower capability. These are people who access the market, these first-time buyers. They've been able to access the market, and they do so with a much higher percentage of FHA loans and a far lower down payment. Next slide. Nearly half of the renters, and I think this is important, still view homeownership as extremely important. The desire for home ownership, particularly among more recent immigrants, continues to be extremely high as we run it over time. And the lack of aspirations being met has consequences. California has been the most innovative state. We've been the most technologically forward. We are losing potentially that generation because of their failure to access adequate housing. Next slide. Again, over 1/3 of the renters have been savings for home, and that's significant. But if you look at the length of savings and the alternatives that are now confronting, there's reasons for concerns even in this positive number. 5 or more years of savings is a long time to wait to access a home. Next slide, please. There are a lot of government legislative solutions. I know we're going to be talking about those. I think there's a lot of interest, in particular today. Later today, I'll be speaking with Senator Padilla, and obviously there is housing dollars that we have not seen for quite some time in the current discussion on the social benefits package. And those have been cut as a deal is trying to be worked out, and I suspect will be worked out, but preserving those dollars and in fact increasing them is a very, very important goal if we're going to meet the housing challenge that is currently here, let alone the one we're going to confront over the next several years. Next slide. CAR has been very involved in this. I won't spend a lot of time on these things, but our Housing Affordability Fund has introduced a new closing grants program. We've allocated on a test basis the initial $1 million to this. Obviously, that's a very small start, but one we're proud of. Those people who will be eligible for this fund will be targeted first-time home buyers underserved community. Recipient income is less than 120% of median income. The intent is to occupy the homes for a minimum of 3 years, and using low down payment loans. And we certainly try to leave them with a little bit of savings after purchase, because from our perspective, there are things that occur when you buy a first-time home, in particular buying an existing home. So this program is part of something we've initiated over the last several years in our Housing Affordability Fund. If it works as well as it can, we look forward to working with many of you in terms of creating an even larger program on our end, and certainly encouraging others to create programs of a similar nature. Next slide. Again, for those of you who are realtors, this is some of the information. If we can help you as you look at your mortgage financing options for your clients. I think there's also one last challenge from our perspective, and that is that we think there is a lack of knowledge. Even those who are capable of entering homeownership in California are sometimes confused about the options that do exist. And I know this is one of the goals of everyone here, to better educate the consumer. And 63% of homeowners, of consumers rather, would start searching for a home if they knew they could qualify for a low down payment. So again, I think we've got a continual job here. We look forward to working with you. And again, thank you very much for allowing us to present.
Thank you, Joel. Those stats are pretty amazing, actually. And you touched on it at the end. The awareness factor is a huge aspect with down payment assistance. Home buyers still today think you've got to come up with 20%, a good portion of them. So that is definitely something that we've also been working on, is to get that awareness out here, which leads us to Down Payment Resource. Sean Moss, Senior Vice President of Down Payment Resource and Director of Operations and Customer Support at the firm. He's responsible for guiding product strategy, driving product development, and ensuring operational efficiency, while also collaborating with customers and partners to implement new solutions for affordable lending challenges. Thank you, Sean. Take it away.
Yeah, thank you, Craig, and Joel, thank you too. We see the same data, whether you're looking at NAR, MBA, Urban Institute, we're all seeing the same thing, that there's a huge lack of understanding of down payment requirements and the availability of solutions. So the last 14 years or so, we at Down Payment Resource have been trying to shed light on these programs. And one of the ways that we did that was 14 years ago to say, you know what, there are so many cities and counties and nonprofits, in addition to all the state and local housing finance agencies that offer these programs. Let's just put them in one place. Nobody had ever done it. Nobody had tackled it. Maybe somebody had thought of it. I don't know. But so we did that. And since then, we've partnered with organizations like the California Association of Realtors, like most recently, California Regional MLS, Barris MLS, Golden State Finance Authority as well, all to raise awareness of these programs among consumers. But we also know that a prospective homebuyer is still most likely to find out about these programs from either a realtor or a loan officer. So part of what we do at Down Payment Resource is expand awareness of these programs to the professionals that are going to eventually serve these home buyers. So we integrate with MLSs into their listing data sets. We've partnered with CAR, and we thank Joel and the CAR team for that for years, to bring awareness of these programs to the real estate professionals. And just so we're all clear, just in California, and I don't know that anybody ever takes stock of this, but we all get focused on our own program. There are 350 homebuyer programs just in California. There are 200 agencies, over 200 housing agencies, whether you guys are municipal, nonprofit, CDFIs, housing finance authorities, that are providing these programs. 267 of those are down payment assistance programs, but we also monitor all of the affordable first mortgage options, the high LTV, low MI programs that could be coupled with DPAs and so forth, mortgage credit certificates, if and when they're around. And as far as listing data, we just recently launched a partnership with California Regional MLS. So 90,000 realtors are seeing all of your programs now, or maybe more than that, inside listing data. And over half of their inventory is eligible for programs like yours. So we are promoting all of these programs, and I actually want to show you how here in a moment, what this looks like on the street from the realtor or the home buyer's perspective. But CAL-ALHFA, Golden State Finance Authority, all the local HFAs, community development institutions. We monitor Federal Home Loan Bank funds, all of the local and state realtor associations, NeighborWorks, neighborhood housing services, you name it. We're monitoring all of their programs. And I'll put this up later here, but I want to actually show you what this looks like. So Joel mentioned briefly our partnership we have for many years. In fact, CAR was one of our earliest partners to kind of see the light and appreciate and understand what we were trying to do here. But that is to enable the home buyer, the realtor, or anybody, quite frankly, to come to CAR's site and to search for any and all down payment programs that are available anywhere in the state of California. So if I look in San Diego here, just to start, we will layer in all of those opportunities from the state, and we'll link you to their program provider information so that professionals and consumers can find out who are the lenders that are going to help me. How do I take that home buyer education class? How do I learn more about this program? How do I contact that agency? And then we've also now integrated with MLSs. And so I'll show you here what this looks like for California Regional MLS. So what we're doing here is looking at property information as properties hit the market, as listings hit the market and become for sale. We are taking that listing data and looking at all of the DPA programs from you, from your peers, from your counterparts, and identifying which programs are available, if any, for a given property. And then we're showing that to the realtor, who can in turn show that to their consumer, to their prospective home buying client. And so when we talk about lack of awareness of down payment assistance programs or misunderstanding down payment requirements and all these things that keep a lot of otherwise eligible buyers on the sideline, renewing leases, watching prices rise. We'll see about rates, but inevitably at some point watching rates rise too, and watching the goal of home ownership further slip away. Well, we want to combat that by, at the very least, showing realtors and brokers that, hey, there is help out there and there's a lot of it. So this is an example of what we're doing here. With CRMLS, we've integrated into their listing data any property eligible for down payment help will have this down payment icon. And this is for realtors, right? I'm playing realtor here for a moment. So as I scroll down this list of listings, I'm seeing which ones have any kind of down payment assistance available. And then if I click on that button, it tells me how many programs there are, how many dollars I might get from among those programs, which programs specifically are available. So state programs, I'll show you here. Let's look at Open Doors from Golden State. If I were a realtor and I wanted to have a conversation about this program, I might need to learn a little bit more, but I've got the basics at least. One, I know the program exists. I can get up to 7% of the total loan amount in down payment and closing cost help for that buyer. But if I need more, or if I need help, I can find their participating lenders, as we do for every other program provider, nonprofit, municipal, and so on and so forth. If I need to get my home buyer through the required home buyer education class, I can do that as well. I can figure out where to go. I can contact that program provider as a realtor and learn more. How do I partner up? How do we co-train? How can we sponsor some marketing events? But now as I scroll down through the programs here, we're going to see all manner of other options. And pardon the scrolling because there are so many programs in California, but Federal Home Loan Bank, we're tracking them. We're presenting those. Local nonprofits, housing agencies, San Diego Housing Commission, they have several options here. There's a program for police officers. There's a local realtor association. Now they may not have money at the moment, but we will monitor that for all of these realtors as well. And then these realtors are sending listings to prospective home buyers. They're trying to show these buyers properties that are hitting the market as they become available and finding a path to home ownership. So part of our goal here is not just to shine a light on all of your home buyer assistance programs for the realtor, for the lender. We do a lot with lenders as well, but also to illuminate that path to home ownership for the consumer. So the consumer sees that there's down payment help out there, and they can also figure out what those programs are, talk to their realtor about them, and even account for any household information. So let's say they currently own a home. We want them to know that does not disqualify you from buying a home, of course, but it doesn't even disqualify you from getting down payment assistance or maybe they've got a low, a median, a high income. If they want to account for the income, we will account for the income limits of all of your programs. Maybe somebody in the house is a teacher and there's an additional program available. We can account for that. So all of this is, again, to show the consumer which programs are out there and give them information about how to take the next steps, give them actionable information about what they can do to pursue that dream of homeownership, knowing now that there is help out there for them. And then we also provide realtors with additional tools, and I'll leave you with this, to show them, or to let the realtors, in fact, show consumers that this help is out there, even if they're not looking at listings yet. So this is just one example of many of a realtor trying to shed light for consumers on the fact that there's help out there. You don't have to have 20% down. You can get down payment assistance and talk to me, essentially, is the message here for realtors about figuring out that path to homeownership. So I'll leave it at that, and Craig, pass it back to you.
Thank you, Sean. That was actually amazing. I know you guys have been working on this, but I had no idea how complex that is and how much information is available. And I appreciate it because, as I said, the awareness factor is lacking, and there are so many down payment assistance programs out there. I didn't know there's that many in California. That's absolutely amazing. I'm going to turn, well, first off, I'm not sure if we should do questions now, Rochelle, or after I turn it over to Carolyn in the next session. I'll turn it over to Carolyn, and then we'll look at any questions at the end of this session before we move into the second half. Carolyn Sinceri, my colleague at Golden State Finance Authority, she brings over 25 years of public relations and marketing experience. She's been in this position for 16 years at Golden State Finance Authority. She's responsible for the content and design of publications, websites, advertising, media, and public relations, and directly involved in training and education of lenders, realtors, and other partners that we work with. Carolyn, I'll turn this over to you. Thank you.
Thank you for that introduction, Craig. Good morning to everyone here with us today. I am monitoring the Q&A, so if you have any questions for the panelists during each of the sessions, please use the Q&A, send us a message, and then we'll direct it to the right speaker. I'm not seeing any Q&As at the moment, Craig, so with that, I'd like to go ahead and move us into the next session. This is going to be a panel of industry experts going to talk about building minority wealth through home ownership. Can we go ahead and add the panelists, please? And again, thank you, Sean and Joel, for joining us today. We'll just give it a minute or so to get set up. Most of you that are here today probably are very aware that we have an issue in California, in the nation, with minority homeownership rates, and that they fall well below those of white families. White families run around 73% in the homeownership rate, and what we're seeing in minority groups is somewhere between 56% for maybe Hispanics, all the way down to around 43 or 45% for Black families. And that is unacceptable. So most of you here today have probably already heard about the problem. What I'm hoping to do is to bring these industry experts together today to talk more about solutions. We already know about the problem, but how can we all integrate practices into what we're doing today to make a difference, to actually change this? So with me here today is Tony Thompson. He's the CEO and founder of National Association of Minority Mortgage Bankers of America, also known as NAMBA. NAMBA is an organization that's been dedicated to increasing the engagement of women and minorities with the Mortgage Bankers Association at the local, state, and national level. Since its inception in 2016, NAMBA has grown to over 30 chapters and over 4,500 members nationwide. So welcome, Tony. Also here with me today is Eric Lawrence Frazier, MBA. He is the CEO and founder of The Power Is Now Media, And he's also a mortgage advisor with First Bank. Eric specializes in working with first-time home buyers and investors in residential and 2 to 4 unit residential properties or real estate properties, both purchases and refinance transactions. He's been a California real estate broker and consultant for 30 years and a federally licensed mortgage broker or mortgage lender for 40 years. Welcome, Eric.
Thank you.
And then lastly, I'm pleased to introduce the Director of Legislative Policy and External Affairs with New American Funding, Charles Lowry Jr. Charles brings over 20 years of mortgage, housing, and advocacy experience to the current position he has with New American. New American Funding is a growing independent mortgage banking company. Most recently, Charles has served as Director of State Regulatory Relations for OCWEN Financial Corporation, where he interacted with state regulatory representatives and industry groups. So welcome, Charles, to the panel as well.
Thank you.
Did you want to keep the others in here as panelists, or did you want to narrow it down to just the 4 of us? Okay. Well, I said a little bit of the background. I talked about how I really want this discussion between the 3 of us or the 4 of us to be about what we are integrating into our business practices today and what we can share with the attendees about what they can do to help change this, how to increase minority homeownership rates. Year after year, we know that studies keep producing information about all the positive impacts of real estate and homeownership on families, communities, and the economy as a whole. But did you know that real estate is actually one of the largest factors in building financial security? It truly does impact someone's financial security and future. The Federal Reserve has actually estimated that the net worth of a homeowner in the United States is $255,000 versus a renter that it's estimated their net worth is only $6,300. That's huge. But we're not dealing with an equal playing field, as I mentioned before. Minority homeownership rates today are well below those of white households. So in the last year and a half, Golden State Finance Authority has been very focused on Black homeownership rates, as well as other minority groups, but really trying to make a difference through education and awareness campaigns. But today I want to bring these other speakers in to discuss what their organizations are doing as well. So let's get started. Charles, I'm going to start with you. New American Funding launched an initiative in 2016, and they actually named it New American Dream. Can you tell us a little bit about what it is, what its goals are, and how it's been achieving those and what it's hoping to achieve in the coming years?
Thank you, Carolyn. It's very appreciate the opportunity to be here with the panelists, Tony and Eric. I want to thank you as well as the organizers of the symposium for this opportunity. The New American Dream is an initiative started in 2016 by Patty Arviello, our co-president, our co-founder and president of New American Funding. She modeled New American Dream after Latino Focus. Latino Focus, she started as a Latina being in the mortgage industry and looking to reach Latino borrowers by just having loan officers who mirror their community, setting up events, activities with NARAP, the National Association of Hispanic Real Estate Professionals, and beginning to just really, in a simple way, have those people in our company mirror the communities that they serve. So New American Dream is really something just based upon that for the African-American community. Although the challenges for both communities are somewhat similar, but very different in terms of culture and issues. The New American Dream initiative has grown over the past 5 years to a point where we are now the 3rd largest lender to to the Black community in terms of our 2020 HMDA data. And by that, I mean that 12.4% of our purchase loans went to the Black home buyers through our 2020 HMDA data, compared to 6.7% average for the industry. So you see that we're, based upon the industry average, we're almost doing, Carolyn, 100% or double the amount of loans. And how are we doing that? Again, it starts with our loan officers, our activities, our events, our partnerships. We partnered with NAMBA as well, and Tony. But it's a great program that has begun to take off, but it can't do it on its own, Carolyn. It's really a program that is ours, that we own, but we want to make sure that what we're doing and the secret sauce we have is simple, and we want to share that with others and hopefully be successful.
So are there specific objectives or specific things that you're
Yes.
doing that has really resulted in this increase in properties being purchased by Black Americans?
Well, I think that when I talk about mirroring the community, for example, we have a total of 114 Black loan officers with our company. 61 of those are with our retail unit that do, and the outside, 53 of those persons are at our call centers. And I think that that's where our efforts start, is that we have people, again, home buyers are looking for people like them, people that know their concerns, people that see the issues that they have. And I think that that's where our activities start. I think also, Carolyn, we also are working in states where we think that there are opportunities for home ownership. In Georgia, we have in the Southeast region, we have affordable homes that are available. We're working with lenders and builders in those communities, and we're really being successful at helping Black home buyers really find homes. We're trying to build that same base here in the Washington area where I am, in Maryland. We're looking at areas that are affordable for housing. Our previous panelists talked about the difficulties in the California market, and we have to take that into consideration. We have to look for places that we can build this out, but where home ownership opportunities are available. But that's not to say that we don't consider California a prospect. Just last week, we attended the Mortgage Bankers Association conference in San Diego, as well as CARAB, which is the California state organization for NARAB, which is the National Association of Real Estate Brokers. So we attended that conference to really help build a base with Black realtors in the state of California. So I think it's sort of we can talk more. I want to hear from you as well as the other panelists. I think there's so many initiatives that are coming together now. The MBA has a minority home ownership initiative. The National Housing Conference has 3 by 30, which is 3 by 2030, which is 3 million new Black home owners by the year 2030. All of these groups are coming together at this moment in time. And I think that if combined with industry activities and support, we can really achieve and move the needle in terms of increasing Black home ownership.
One of the things that I heard you talk about was representation within your own workforce. And I know we're going to discuss that a little bit further with all the panelists, but I think that's really important. And then I also heard you talk about the focus on the areas where the minority home buyer is living or renting. And, and I think that comes down to, and you can agree or not, but the lenders and real estate agents not always going for the low-hanging fruit. Like, you need to be looking at where are their affordability issues? Where are there minority home buyers that are not getting into this real estate market, and focus your efforts in those areas? Would you guys agree?
I would agree. I would agree. I think that we're looking at places. California is I know difficult in some respects, but we're based there. So as a company, we have a desire to be there. Texas, Georgia, Maryland, the Midwest areas, Tennessee. There's so many different areas, Carolyn, that we have offices across the country, and we're looking to really build out that in just the way that you've mentioned.
Well, it's great to have New American doing this, and it looks like you've been one of the forerunners to have started this a few years ago. And I agree, we're seeing so many industry organizations getting on board. This isn't just going to impact the financial security of minorities. This affects our entire economy by bringing some equity across the board. Eric, you work with the Power Is Now media, and you can maybe go into a little bit more detail about what TPI actually does. The Power Is Now is an African-American Black home ownership. Sorry, the Power Is Now has an African-American Black home ownership initiative that you launched on Juneteenth of this year, June 19th. And I've been working with you very closely on this same initiative. In addition, you've written on your own company website that you have committed the rest of your career in banking to achieving this goal. So this is an important issue to you both professionally and personally. What is your strategy to increasing minority home ownership?
First, thank you, Carolyn, for inviting me to participate in this panel discussion. And let me say, in addition to being the president and CEO of the Power Is Now Media, I am also a vice president and mortgage advisor with First Bank. My license number is 461807. The views and opinions that I express on this panel are my own and do not necessarily reflect that of First Bank. I am extremely passionate about homeownership, and that passion is just born out of my own experience and of being raised by parents who didn't own a home for many years and finally purchased a home after getting divorced and selling their home. They both passed on, not being homeowners, not leaving any inheritance for their children. I'm the oldest of 7 kids. The Power Is Now came into fruition, if you will, in August of 2009 as a means to provide information to real estate professionals about the opportunity to assist banks, particularly at that time, Wells Fargo, and then other asset management companies and GSEs in disposing of assets, REOs. And as you know, we were going through the great financial crisis. And so the foundation of our existence is all about providing information and access to information. The success of those teleconference calls forced us to find other platforms to be able to accommodate more people. And that's when we discovered in April of 2011, Blog Talk Radio. Many radio stations were trying to go, broadcast on internet anyway. That became so successful that we eventually, today, here we are, fast forward 12 years in broadcasting. We're syndicated. You can find the Power Is Now on any platform across the country. And that led to the magazine and the TV shows with Facebook Live. And so at thepowerisnow.com, you can see a lot of great educational information about homeownership. We have one focus, and that is to make the American dream a reality about homeownership. And we're leading that conversation through alliances and partnerships. And I so appreciate the Golden State Finance Authority and partnering with me, because in just being able to provide more information and make that information available, not just online, because everyone has a website, but in a video format in which we really break down the benefits of homeownership, the down payment assistance programs, the details of those programs, so people can not only get the information, but take action right away. I was just reading a report by the Pew Research Center. They did a study earlier this year and reported that 81% of Americans are getting their information on YouTube, and about 79, not a big difference between the two, and that is YouTube, Facebook, it's about 71 or 78%. And so people today are getting their content, getting their information about homeownership online. And we knew this was coming because, it was told to all real estate professionals, the first thing the person's going to do is Google you, right? And then now they're not just Googling you, but they're also looking for information. And so we're committed as a media platform by accident, to be the resource for consumers to learn about down payment assistance, and particularly low to moderate income communities and African Americans, because we represent the lowest rate of homeownership of all communities. As a banker now for 40 years, I'm a witness to the lack of outreach by financial institutions, both banks and non-banks. I'm a witness to the lack of diversity that exists among mortgage banks and commercial banks to serve low to moderate communities and minority communities. And I tell you, I am so impressed with what New American is doing. I had the honor of interviewing Patty and going into details about their training program. They are setting the pace. They are leading the way. I wish the entire industry would take notice as to what they're doing and the impact they're making, and it's measurable. And looking at the data, the impact they're making. And then what Tony is doing in terms of bringing that attention to being more diversified in the workforce, and bringing it to the attention of major companies to actually reach out to historical Black universities and other schools and identify young African Americans and because we're all getting old and retiring, to get into this incredible industry. I know that I stumbled into this industry. I was going to be a doctor. I was a chemistry physics major. I dropped out, got married at 19, went back to school, and 40 years later, both in marriage and in mortgage banking, I tell you, I didn't even know that the opportunity like that exists for someone like myself to be able to get into a financial industry, make an incredible living, provide a great opportunity for my family and generations to come. And so it's my personal experience that has made me absolutely committed for the fourth quarter of my career now. I'll be 60 next year. I want to spend the rest of my life truly making an impact in my community and providing access to information, being a bona fide expert on all down payment assistance. And I tell you, I love what the Down Payment Assistance Center is doing and making that information accessible on the MLS. And because real estate agents it's not intentional, but they turn their nose up to people bringing down payment assistance to the table in transactions. They have all this misinformation about the time it takes when a person is using down payment assistance. And so there needs to be more education, more outreach, and I'm happy to be in partnership with you, Carolyn, and with the California Housing Finance Agency and advertising their programs. And I'm looking for further partnerships with other organizations, including the Down Payment Assistance, to create content that really explains how to use the program, how to access the program. Now, I know I'm probably going over my 2 minutes, but Carolyn, you know me, so stop me if you need to.
I do want to come back to that. So before we finish this panel, we're going to come back to how can people get involved, at a more, on the street level with organizations like this, companies like this. And I do want to come back to the partnerships you're looking to build from here forward. So don't lose track of that, because you've been in partnership with CAL-ALHFA and with Golden State Finance Authority, but you are actually looking for more stakeholders, more partnerships to continue this initiative. And it would be a great benefit to other companies to get involved with your media company. So we will come to that. Tony, I'd like to bring you into the discussion. National Association of Minority Mortgage Bankers of America has been taking a very active approach to increasing minority home ownership by focusing on the people themselves that are working in the mortgage industry. I think the quote that I've seen from you on the company website has been, our goal is to help make a difference in our industry by being involved in our industry. This is at the very heart of your organization's mission. So tell me about this perspective and how NAMBA is doing this.
Absolutely. First of all, thank you, Carolyn, and Golden State, as well as the CAL-ALHFA for giving me a chance to participate in today's call. I love it when I see Eric because he has this passion, and that's really what we need. I'm actually coming live today from Philadelphia, downtown in what they call Center City. We just participated through a collaboration with both a lot of the real estate partners and local and some of the state HFFAs as well, in opening up a first of its kind of home ownership center in the downtown city center area of Philadelphia, with the one goal of helping to just grow minority home ownership and also grow wealth. And so for us at NAMBA, our focus is really simple. First and foremost, we want to make sure that we can help the real estate and mortgage professionals who are in our industry become better practitioners so that they can understand how to provide all the resources that consumers will need, like down payment assistance programs that can help increase home ownership. Why? Because last week at the MBA, TransUnion came out with a study that said there are currently approximately 300 billion, so 300 with a B, ready now, LMI, CRA, first-time home buyers for both purchase and refinance across the country. So when you think about the opportunity for cities throughout California and agents and lenders as well to look at ways to not only grow their production, but most importantly, help the consumer, the first-time home buyer through utilizing DPA is very important. But secondly, at NAMBA, we also know that we have to help make sure that every lender represents the company, the marketplace that they live and serve in. And so our goal at NAMBA is to make sure that we can also connect and introduce college students to exciting careers, because we know that from a demographic standpoint, we need more young people in our industry, and we need more diverse young people of all ethnicities and all backgrounds. And so that's our passion and our mission here at NAMBA.
To explain a little bit more about what you're doing at the college level, because this is very integral to NAMBA, bringing up a diverse population into the mortgage industry, right? So that the home buyers out there see representation of themselves and can connect with that. So tell me a little bit more about what you're doing at the college level.
Absolutely. First, this year in September, NAMBA released a State of Diversity Within the Mortgage Industry report, which essentially quantified the average age of a loan officer, which is currently 50 years old. But it also showed a demographic breakdown of how we had ethnic population breakdown per, whether it's male, female, and or Asian, Latino, African-American, white. And what the study basically created was a business case that said, we need to have more people in our industry who reflect the demographics of all the communities in our industry. At the same time, if you look, according to NAR, the average age of a realtor is 54 years. And we know that there's a 50-plus age gap or a 50-plus age in the appraisal industry as well. So all three of those industries are very critical to making the dream of home ownership become a reality. And so for NAMBA, our goal is real simple. We want to put chapters on college campuses throughout the country in both public, private, HBCU, historically Black colleges and universities, as well as high predominantly Latino-based schools and institutions in really two efforts. One, to intentionally introduce students to exciting careers within mortgage, lending, and or appraisal. And then secondly, to make sure that we can start the education process for helping students to understand that they can become homeowners after they graduate from school, instead of taking 10 years before they get the keys to that first home. And that's a significant wealth building opportunity, but that's also a significant opportunity for our industry, both in real estate and lending, to help increase home ownership by really focusing in on the current generation that we have coming through college. And so that's our goal, is to have colleges located throughout the country, certainly throughout the footprint of California, which has a very diverse population, a large college base as well. We want to make sure that we're representative in that market so that then lenders, real estate companies, and also appraisal companies can tap and introduce these young people to their careers, to their companies, and start bringing in that next generation of leaders across our industry.
So here in California, how many chapters has NAMBA initiated, and what's in the forecast for this next year?
So currently NAMBA has 4 chapters in the great state of California. And we're looking, and those chapters are San Francisco, Orange County, San Diego, and also LA. We're also getting ready to do a launch in Riverside, California, as well as Sacramento, California coming up in the first quarter of 2022.
That's great. And I hope that GSFA will continue our partnership with you as we launch further in California. For those people who want to be more involved with NAMBA, with these local chapters here in California, where shall we direct them?
They can simply go to namba.org, that's NAMMBA.org, and they can learn more information about all the chapters in their local market and or chapters that are getting ready to launch in their local market as well.
Great, thank you. Charles, let's talk a little bit more about diversity in terms of new Americans' actual workforce. And you mentioned this before, but the statistics are saying 60% of your employees are women, 45% are minorities, and 37% are millennials. How has that directly impacted the goals to increase minority homeownership?
Well, I think that reflects, Carolyn, again, the vision, the ideas of Patty Arviello, our co-president, our co-founder and president. As a Latina, she has been involved in this space for so many years, and she has seen the benefits of a diverse workforce and has set about to really to do that throughout the company. And what I like about New American Funding is that leadership and that those goals, those aspirations, those intentions then become part of the company culture. The efforts that our talent acquisition team has in recruiting diverse loan officers, as well as other persons on the operations end and end of the business, continue. It's just sort of a natural part, Carolyn, of what New American Funding does. And I think that again shows up, at least on the sales side, with the loan officers mirroring the communities that they serve. So it's nothing fancy about it. It's just making it intentional. Our people and culture leaders within our company on the HR side are really emphasizing this, the need for diversity. And so we are just replicating that in all aspects of the company. So I think that is what we do, we continue to do. And then it makes it easy to encourage others to join us. We just had Tony, a woman, join us who, is it Raquel, that is a part of, she just sent an email out this morning about how much she has enjoyed working with NAMBA and wants to continue to improve our efforts. And as Tony knows, we brought a whole contingent of people to the NAMBA conference last month, or it's September, last September in Atlanta. So that, Carolyn, is what we're trying to do, is to really build up the company in those ways, and then outreach to different and partner with other organizations using those people and including everyone in the company in this effort, so that it becomes, again, part of the culture that we have.
I think it is an admirable model, and I'd love to see more businesses increase the amount of women and minorities within their organization. Eric, Golden State Finance Authority has worked directly with you on your Black Homeownership Initiative. And one of the first things that you and I talked about was reaching Black communities, and that it requires stepping outside the box. So share with us how you are getting education out to Black communities and how that is imperative. Are you on my mute? It's usually I'm the one on mute. It has to be
Okay,
corrected.
I apologize. All right, you can hear me okay now?
Yes, we can.
Okay, great. So when I started The Power Is Now back in 2009, I wanted to make sure that African-American real estate professionals were getting their share of opportunity to represent banks, particularly that time Wells Fargo and other asset management companies, to sell REOs in their own backyard. And so it just seems like in every aspect of real estate, there's some form of disparity and discrimination. And so as we started off as B2B in 2008, and when we went online, Blog Talk Radio, and then started doing TV, we realized there was a need to also provide content for consumers. So as an entity, as a media company, we're B2B and B2C. And so in an effort to—
Can you explain what B2B is? Some of these acronyms they may not be familiar with.
Okay, so we're business to business. And so we work with real estate professionals, we work with housing finance agencies, we work with nonprofit organizations to create content. I mean, the reality is if you're not online, you're not in business. And if you have a message or a program or you want to do some type of advocacy, you need to be online. As I mentioned earlier, the Pew Research shows that 80% of Americans are getting everything they need to know online. So if you're not there, you're not really having the kind of impact you want to have. And so like in the case with Golden State, Carolyn, you and I have spent hours creating content, and it's making a difference. I mean, every day I'm booked with appointments of people who want to talk about the Platinum program, the Open Door program, all from a few videos that were done. And they're not just created. You can create a video and put it on your website, but that can't be the end of it. It has to be distributed. You have to have the ability to distribute your information on multiple platforms. You have to be willing to make the investment in advertising it so people can see it on platforms. And that's what we have done here at The Power Is Now. And so in terms of reaching then low to moderate communities, African-American communities, being African-American, obviously, I've been very involved in my community. I'm a member of just about every Black organization you can name, honestly. And so I make sure that the content that we create gets sent to them, either directly to the leadership or to the entire database if I have access to it. And so the Power Is Now Wealth Initiative, our Black Homeownership Initiative, and please go to the website, thepowerisnow.com, and you can see it under television. We are focused on partnering with housing finance agencies like Golden State, like CAL-ALHFA, creating content that really brings the information about their programs down at a level where people can not only fully understand, but take action. Most housing finance agencies' websites are too complicated, too dense, too much information. Only real estate professionals can actually navigate through it, and even they don't fully get it and understand it. And so creating videos and podcasts that truly break it down is what we're doing. We're creating the content, and then we're partnering up with the organizations. So like, for example, the NAACP, the 100 Black Men, Black fraternities at HBCUs, Black business fraternities, Black doctors, lawyers, teachers. I have a full-time person who that's all they do all day long is build our database. We have databases of every organization in our community that you can think of, and it's growing every day. And it takes that kind of investment and effort to be able to identify who the people are, get their buy-in to then act as a conduit for us. As we deliver the content to them, they in turn make sure it's delivered to their membership. And so I'm in the process right now of creating MOUs with organizations across the country so they can be conduits for the information we are creating. So we're not just relying on the internet itself, posting it on Facebook, YouTube, and all the platforms, but we're also making sure that there is that direct connection with these organizations to ensure that the information we're creating that is good for both the consumer, so B2B is business to business, B2C is business to consumer, is getting it, and it's a kind of information via podcast as well as video that they can actually take action on. And so the Powers Now Black Homeownership Initiative, we are looking to partner with every housing finance agency, like we've done with Golden State, to create that kind of content. It is video, it is podcast. And Carolyn, I'm really excited that come January, all of our content will be available on Apple TV, Android TV, Roku, Fire Stick, every smartphone device, every Samsung smart TV. That's in January. And that's going to take our current reach of about 12 million right now to over 300 million. And so having this platform, I am all in on working with organizations who want to partner with us to create the content. I don't care what the program is: closing cost assistance, down payment assistance, education, financial literacy, working with HUD-approved counseling agencies, working with NAMBA, working with other banks and organizations. If they have programs that's going to make a difference in our community, it's all about creating the content and then distributing the content. And that's where I think we are great partners with any organization, and particularly with real estate agents who want to build their brand online as a resource and an educator for home ownership.
Yeah, and I do want to encourage people to partner with the Powers Now Media. Golden State Finance Authority's experience with working with you, Eric, has been wonderful the last year and a half. We do not have 50, 60 employees who are experienced in creating videos and media content at the level that your media company does. And so it's been a huge asset to us to help put online content together, to create advertising ventures together, and kind of just outsource some of these things that we just don't have the expertise in to a company that does. And you become that conduit, as you mentioned, to getting information out to the consumers or to other business partners. But I also wanted you to talk about what we're doing with churches, because the Black community is very influenced through churches and religious organizations. And I think that that's important to talk about.
Well, thank you for bringing that up, Carolyn. So I'm a PK. My father was a pastor. And then I have served as a pastor for many years. I still am very involved in ministry. Started preaching at the tender age of 9. I was a boy preacher. And in fact, I credit the church for my ability to speak and do everything I do today. So I have this affinity and love for pastors. And in fact, just this weekend, we partnered with Golden State Financial. Megan did a fabulous job in talking about the Golden State program to Covenant Church. They're in Berkeley, California. We had a lot of people join us on Zoom to talk about the state of the market. We had a local realtor, Joe Fisher, Michelle Dupree of Fisher Realtors. They're VIPs on the Powers Now platform. Talk about the market out there. And then I went into more detail about home ownership programs. Megan talked about the Golden State Finance Authority programs. I went into the California Housing Finance Agency's programs. And already, this was Saturday, today is Thursday, and I think I have 20 applications just from that one Zoom meeting. And so we are partnering with churches across the country. And so I'm not approved as a bank. First Bank is not approved in every state that has a housing finance agent. We're approved in 48 states, but we're only approved in a few states with housing finance agencies. So, but I'm looking to partner with housing finance agencies in every single state, create that content, partner then with the churches in their state, of which I know who they are already, and to create this kind of content online. In fact, that's what the Powers Now Black Homeownership Initiative is all about. And again, I want to encourage everybody to watch the video on thepowersnow.com, and where I go into much more detail. And then in a couple of weeks, we will have a book available on Amazon about the Black Homeownership Initiative that we're making available to the whole world and what we're trying to do. And let me just say what it is, just in the most brief way I can. We're partnering with housing finance agencies to create content that is for the consumer. We are then taking that content putting it on our platform and distributing it worldwide. We're also delivering that content directly to stakeholders in our community. So we're forming MOUs and relationships with Black churches, Black organizations, Black fraternities, Black business fraternities, Black chambers across the United States to ensure that this content is being then delivered to those who really need to hear it. And that's been the challenge. Every time I conduct an interview with someone, they have never heard of Golden State or CAL-ALHFA. They've never heard of it. And these organizations have been around for 30 years. And so I realize, and it's really through our working together, Carolyn, that I realize how important this really is to be the voice, to amplify the voice of these organizations who are doing incredible work, providing down payment assistance, HUD counseling agency, providing financial literacy, budget counseling, foreclosure counseling. I mean, they need somebody to amplify their voice. And none of them can afford network TV and all these other very expensive media platforms. And so we want to be that resource for the world. That's my commitment as I close out the fourth quarter of my career. I don't want to work till I'm 70. So I'm all in for the next 5 years there, Carolyn, to make this a dream a reality.
And I encourage any mortgage professionals watching today, real estate professionals especially, to reach out and see how a partnership can help you build your business as well. Eric or Tony, I want to bring you back into the conversation and ask you, what kind of things is NAMBA doing on the street to reach minority groups, both consumers and also industry professionals?
Yes, absolutely. And so first and foremost, we recognize that although there's a great market opportunity, the most important thing is really educating first the real estate professional and the lender, right? Because as you heard me say earlier, Carolyn, according to TransUnion and a report that they released last week, there's 300 billion of opportunities for lenders in the LMI and CRE space. And so at NAMBA, we really believe first and foremost, our main goal is to make sure that real estate professionals look at this market as an opportunity, understand the resources that are there, like tools within HFFAs and DPA programs that can truly help them service this community. There's a lot of stigma sometimes that you may have heard in the past about why realtors may not do that or the competitiveness in the marketplace. But I always start with the basic question to any real estate or lender is, if you have an opportunity to put someone in a home and create wealth, is that not a responsibility to do? And hopefully that individual as a consummate real estate agent or lender will say yes. And if so, we want to make sure through education first of training, webinars, live, as we're getting back out into having events throughout the country where we're conducting that training live for those real estate and lenders. We want to make sure that they understand that there are avenues and ways that they can position their client to get a home and take advantage of the resources through HFFAs and DPAs. And then secondly, there has to be, to Eric's point, education around the consumer piece. We just released a study last week on behalf of the NBA where we conducted over 1,100 millennials who purchased a home in 2020. So they purchased a home last year. And 75% of those millennials said that they go to YouTube as part of their first really assessment of trying to understand the home buying process. At the same time, 1 out of 3 said they really didn't know anything and didn't get the right guidance from their loan originator and or real estate agent about the home buying process. So to me, there's an opportunity for NAMBA to help our real estate and lender community do a better job at understanding how to serve as a fiduciary role to that consumer while also helping them to grow their business. And so we're focused on those two efforts, both with the agent and lender, but also helping the consumer understand where some of these resources are as well.
When I attended the NAMBA convention in Atlanta, Georgia, a few weeks ago, there was a panel of women that were talking about the sensitivities that we need to be aware of around outreaching to minorities and also industry professionals being minorities. And there was something that really stood out for me. I'm going to bring up and then have you kind of see what your thoughts on it are. But one of the panelists explained that as a company, as you are trying to reach minority or Black populations, in this case was the example, the Black community, that you need to be aware of your messaging, because we need to be looking at our own internal biases that we may not be seeing, may not be being aware of, and that requires a lot of honesty and reflection. And as a company, not just the individuals, but as a company, we need to do this. And the example that was used was one of the panelists said that she saw an ad that had an African-American family in the picture, the photo on the flyer, and then right underneath it, it said, you know, homeownership, or, you know, it was an offer for homeownership, and it said, FICO scores as low as X. And she said, when I look at that ad, she was a Black woman herself, and she said, when I look at that ad, I see you're telling me that Black people are poor. And we all heard that panel say, these are uncomfortable topics, but we need to be addressing them. Because when you are trying to reach communities that maybe you're not familiar with, or maybe you're not a part of, you need to be aware of your messaging so that it is inclusive and not exclusive. Do you have some thoughts on this?
No, absolutely. And we agree. As part of our State of Diversity survey, we surveyed the percentage of ethnicity within key departments within all lenders. And what we found was over 80% of marketing companies are white females and or males. And so obviously when you talk about multicultural lending, through our NAMBA family of companies, one of the ways that we support the marketplace is through Cultural Outreach, which is a multicultural marketing firm based actually in LA. And what we help and try to help companies do at NAMBA and Cultural Outreach is really make sure they understand how to engage the market in terms of that consumer from an ethnicity standpoint, but also realize and recognize that all segments within that ethnicity are different. And what I mean by that is, to your point, Carolyn, there are African Americans who are high net worth, just as well as opportunities to service the marketplace for first-time home buyers and or those who are move up and or move down buyers. And so it's important that lenders understand, one, how to engage, secondly, how to connect, and third, how to resonate through their messaging and also their content, because now more than ever, the consumer has so much power. They're looking at a lender, at an agent, at a lender and saying, I have the ability to choose now more than ever. Why should I do business with you? And do you get me as a consumer? Period.
Do you get me? Yes. Yes. So what would you encourage for lenders, real estate agencies, other housing finance agencies that really want to increase what they're doing with minority populations? What would you encourage for them to address these issues?
First, a little ad here, connect with NAMBA. And certainly we can help you around that. Secondly, though, you know, in terms of just general awareness and resource, a lot of times it's really important that if you have local partners, which you do, whether it's your real estate groups, NAREP, NAREP, ARIA, and others in your local market, who are of those ethnicities, they can also shed and give you feedback as it relates to things that you can look at in terms of how to engage and approach the lender or the consumers in terms of marketing their brand or product, just on a general level. But certainly as you look to build a campaign or look to do anything that is going to be of substance, you want to make sure that you're working with a professional marketing firm or organization, because ultimately, to I think someone's point earlier, I had I'm on distribution lists all the time, and I had a recent email where an African-American loan originator was sending out an email saying, I can help you with home ownership, but it was a white family. And I quickly had to help the company understand that doesn't resonate with an African-American consumer, and you have an African-American loan officer. So the most important things that organizations can do is seek out relationships that they already have in their local market that are based on those ethnicities that they're trying to serve. And before they implement anything, at least have a focus session to get that immediate feedback.
Focus session, I think that is an excellent idea. And I think this is a great segue. It's imperative that every organization and company does do some reflection on their business practices, how to improve them. And so I'm going to bring Charles into the discussion, because that is exactly what A New American is doing. They have what's called let me see here. It's called a listening group. Is that correct?
A listening circle, yes.
A listening circle. And I want you to share with our audience a little bit about that.
Sure. Well, the listening circle was started again through our leadership. I keep coming back to Patty Arviello and her unique view and her style and direction of New American funding. And following the issues that came up summer before last around George Floyd, the social justice movement that we all saw, there was a desire to really allow our employees a safe place where they could talk and speak about these issues. And even with our diversity, there were lots of feelings that came out during that time. And it was thought that this was a good place, Carolyn, for those thoughts and those ideas and feelings and concerns to be expressed. So the listening circle was started during that time, and the activities of the circle continue. We're trying to look at it, even that was a moment in time and something that was sort of changing now, and we're beginning to really look at our employees more closely and to see how we can further develop the listening circle. But I think that is just one place that our employees can engage and be a part of this effort that we have in our company culture. In other ways, we're looking for people to join our, to become a part of our New American Dream Task Force, our Latino Focus Task Force, and other groups that we're beginning to develop internally from an employee standpoint. So it does continue, Carolyn, but it's a sort of a step in the process. And I guess I just wanted to say that as we're talking, and what you wanted from this group was really to talk about solutions, right? And how we move forward, not to dwell on the problem, but what are the opportunities? So I was taking some notes, and I just thought about, and I wanted to mention that Freddie Mac has really partnered with us on a year-long series of webinars around the challenges and opportunities for Black home ownership. Pam Perry leads the group called Single Family Equitable Housing. And so they just did a survey to follow up with Tony. They did a survey on the issues around appraisals, and they did find that minority homes are coming out in values less than majority owned homes. That's some really interesting data. At the KRAB conference last week, Andre Perry from Brookings Institution talked about property valuation and those issues. Between Sandra Thompson, acting director of FHFA, has been speaking on these issues. along with Marcia Fudge, our Secretary of HUD. So on the federal level, Caroline, there is a coming together around this issue. When Eric talked about housing counseling agencies, they're key housing counseling intermediaries such as NID Housing, Home Free, the Urban League, as well as Unidos US, formerly La Raza, that really sit in that space of helping us increase our housing counseling information. I was thinking about NAMBA, obviously what Tony's doing, what Eric is doing in this media space and with HFAs. I was thinking about realtors. Next week, for everyone to know, NARAB, the National Association of Real Estate Brokers, the Black Real Estate Brokers Organization, is having a Black Housing Summit at Texas Southern University on November 4th and 5th. And they're going to release the State of Housing in Black America report, the SHIBA report, which gives us another set of data. It may show many of the issues that we've talked about, but also hopefully some new information going forward. I was just thinking that, and that I guess goes along with what Tony's TransUnion information about the potential from LMI borrowers, what potential they have to enter the homeownership. So I guess I'm just saying, Carolyn, that it's a whole effort, right? We have all of these different, Eric's talked about that too. There are all these different organizations and people in different places, and we really have to manage and harness those energies. Consumer advocates are really working hard to make sure that the down payment assistance program that President Biden has proposed doesn't get left out of the final bill. Everyone has a role to play, I guess I'm saying. The MBA, as part of the Minority Homeownership Initiative, has initiated a pledge for companies to take to increase their minority homeownership goals and initiatives as well. So it's like all of this, again, is a moment in time that we really haven't seen before. And I think that we have to take full advantage of it right now, right here, right now, to move forward. I hope that helps to answer your question.
It does, and I agree. This is a multifaceted approach, and it seems like the industry as a whole is getting on board to make a difference. I am encouraged and excited to see these homeownership rates have a stark increase in the next 5 years, next 10 years.
Yeah.
Because of all the efforts at the highest level, at the legislative level, all the way down to those on the streets. And you don't have to, as you mentioned, you don't have to create, you don't have to do this all on your own. Partnering with other groups, partnering with counseling centers, partnering with other organizations, and then aligning your own business practices with what they're doing is part of the solution. And it takes some of the work off of you, but definitely puts you on the road to success. So I want to thank all of you for being a part of this panel. I would give you a few last words. We're running a little bit short on time, so I want to check questions because there might be some questions directed at each of you. So if you'll bear with me just a moment, I think someone from CAL-ALHFA is going to help me facilitate some of the questions.
Good morning, everyone. Thank you for joining us for the conference. We have an open chat, and I'd like to actually bring all of our panelists in. If you've got specific questions for the panelists that are on right now, please don't hesitate to add those to the chat. What someone did ask, for most of the resources that you've been giving, can you put those directly into the chat? The website information, the links to the info, so that we have that clearly.
Yes, that would be wonderful.
There are two questions that came for our first panelist. So if you can bring them up, we can get started with that. And again, I welcome everyone to please join the conversation throughout the day. Our first question came from Sujata Raman, And she said that the issue is that mostly all down payment programs want to be in the second lien position. Is there a resource to check down payment programs that are willing to go in a more junior, a third or fourth position, so that multiple down payments can be combined? Can someone from that first panel answer that question?
If I may. Yeah, sure.
Absolutely, Sean.
At Down Payment Resource, we track a copious amount of detail about all of your programs, including for your peers who will accept third or fourth lien position and will thus layer with, you know, your program, or you layer with Golden State, or so on and so forth. So yeah, we're happy. I put my contact information in the chat. I'll do that again. Happy to set up a call with my team and show you exactly how it is that we do this, track and monitor your programs. But it is and has to be a collaborative effort. So we need your help to do that in order to broadcast your programs to more and more people.
If I can add.
Wonderful. Absolutely, please.
So I am not aware of a nonprofit, a state, county, or city program that would not allow layering. And so whether it be the Golden State Finance Authority or the California Housing Finance Authority here in California, they will go behind approved seconds and thirds and even fourths in order to get that mortgage down to a payment that is affordable. And this is typically the case for very low to moderate income buyers. They need that kind of subsidy from counties and cities and other nonprofit organizations that are willing to take second, third, fourth positions to get the payment affordable, the loan amount to an affordable payment. And so I specialize in down payment assistance. If anyone needs any further direction on that, please reach out to me. And I'll be utilizing also Sean's resource, because it is an incredible platform to keep it all together in one place.
Well, let's make sure that you put into the chat your contact information. And I would ask the same for all of those who are in the audience, if you wouldn't mind putting into the chat your name and your organization so that we can know who is joining us today. All right, we got a second question for Sean again, and this is from Susan McDevitt from Mary Erickson Community Housing. And she asked, can you access the database outside of the MLS? And how, as a nonprofit, can we access it? Thank you, and great information.
So there are several ways we can offer access to data or partner with you. Happy to show you some of those. And again, I just put my information in the chat there. But yeah, I mean, the first thing we would do is send you all the data we have about your program and just make sure that's right. And then we can compare against peers, and there are other things we can do with you as well.
I didn't see this question, but I'd love to answer it and ask it to our panelists in our second session. At the risk of sounding crude, Black is in right now. And so there are a lot of programs coming fast and furious towards the Black community. How do we know the value from the counterfeits? What advice do you have for us?
I would say that first and foremost is looking at the entity that is out there doing this work. You know, the longevity, the history of this organization, its credibility. You know, with us today are organizations that—
Well, how do we find that information, Carolyn? Do we go to a group like yours and ask, who are these people?
I think that's a great way to do it. You know, the people that are making a difference are big names, and then they can link you up with smaller organizations. So reaching out to Tony at NAMBA and saying, I've been offered to work with this local housing counseling service, and have you heard of it? Have you done business with them before? Is going to tell you something. New American, First Bank. Eric is also with First Bank, asking them if they are familiar with this organization and what they're doing. And yes, I think reaching out and creating a network to get some background on different agencies will tell you things. And as far as lenders, you know, you'll know whether or not they are originating loans within the Black community. If they aren't, then they're not actually making a difference. They're not actually doing business. as they're saying they are. So if you're a real estate agent, the relationships that you create directly with the lenders that you refer business to, I think you need to vet those loan officers. You need to vet those lenders and make sure that they are working in affordable housing programs and that they truly are outreaching to the communities that really need the improvement in homeownership.
Carolyn, one other thing just to add to that, at NAMBA, to the presenter's question, Black is in, we recognize that a lot of companies want to service this marketplace more. We're here to help those companies do that. And in doing so, last week, we announced a new certification for lenders called the Accredited Social Impact Lender. Accredited Social Impact Lender is called the ASIL. And what the ASIL does is essentially certifies a lender by NAMBA that this lender has developed a comprehensive game plan or playbook, so to speak, to support and serve communities of color and to increase diversity, equity, inclusion, both in their organization as well as outside of their organization. And we're limiting that certification to no more than 5% of lenders in the entire industry will be able to say that they are ASIL certified. And that's one way that we'll begin to get the word out to the consumer, the real estate community, that we want to make sure they know here are lenders that are in it for the long haul, and they're going to be focused on putting together plans that will help create long-term sustainable home ownership in communities throughout the country.
Well, thank you for that. And I know Eric wanted to comment, but I want to thank Pam for saying how much she is enjoying this session. It is a passion project of CAL-ALHFA. Craig has been instrumental. We want to make sure that we are doing our part with local housing finance agencies to encourage move into home ownership so that that doesn't fall behind our mission towards getting permanent rental housing. So Eric, what is the comment that you were going to make?
Well, I was going to say that, bankers, mortgage banks, commercial banks, there needs to be a real effort to hire minority loan officers that reflect communities in which they have branches or loan offices. That is the only solution first to, meeting this demand of 300 million millennials and minorities that are, eligible for home ownership or some type of LMI home ownership. And it's imperative that we do this. I have been in banking for 40 years. I've worked for all the major banks, and I'm a witness to the lack of diversity. And it's primarily driven because the banks are unwilling to make the investment in training programs to bring young people out of college into our business. Most of us who've been in the business for years or longer, we got in totally at risk, straight commission, no support whatsoever, very little training. By the grace of God, we made it through just absolute sheer determination to figure out how to do a loan and how to, make a living. And that's been the business model in this industry for a very long time. It has to stop. There has to be more companies. It can't just be Patty Arivella that has this commitment. She can't be the only one that is willing to put real money behind bringing people with no experience into the business so that they can truly serve their communities. Because in California, we're not even 5% of the population of California, right? And yet our homeownership rate is 35%. So what are the odds that you're gonna find an experienced loan officer and then a person with, enough experienced loan officers to have enough loan officers to be able to serve the community? The odds are slim to none. I can barely count 10 Black loan officers that I know, and I've been in the business for 40 years. So that there needs to be a serious commitment to hiring people of color across the board. And I think that NAMBA is providing the vehicle to make that possible.
Well, that's wonderful. I love that in one of the panels, either first or second, talked about the policy component, and I don't think that we can do one without the other. And my question, and this is coming from me as a permanent rental housing developer, recognizing that generational poverty is broken faster through home ownership. What are the policy adjustments that we can make that can help transition people out of permanent subsidized rental and into home ownership? And I'll say that, and then when whoever finishes answering, we will turn this back over to Craig or Wendy to move on with the program. So thank you for taking time to answer these questions. Anybody can jump in and answer. I welcome anybody. What is the suggestion to moving people out of permanent subsidized rental and into home ownership?
Well, we know that the down payment is still the #1 barrier, right, to home ownership. The only 100% programs that exist right now, there are a few banks that have their own proprietary. In fact, First Bank has a 100% program, but it only goes to 300,000, which does very little in California. Outside of that is 5% portfolio program, 5% down. And so it's still, it doesn't solve the #1 challenge. And so for anyone getting subsidized rental and is in a position now to move to homeownership, I think we need to look at 100% financing. And I've often thought, we have the USDA program, but it's so restrictive and to particular areas. If the Biden administration really wants to make a difference, look at modifying, not creating something completely new, but look at modifying the guidelines for the USDA program. Make it similar to the Indian home loan guarantee program, in which there is the potential for 100% financing, or at least 1 or 2% down. Also VA. I mean, I love our veterans. They give their lives for our country. We have the VA program, 100% financing. But again, here's another example. What about maybe making 100% financing simply available for the low to moderate income, for the minorities, and particularly those who are seeking even now reparations for the investment that African Americans have made to this country for over 250 years. This is one way that we can kind of address some of the wrongs of the past and discrimination and redlining and all the things that have happened, and just tweaking these existing programs so that the transition from rental could be much easier. It still doesn't address closing costs, even at 100% financing, but it takes one component away and we can deal with closing costs and other aspects later. That's my view from a political and a policy standpoint. And I think these are actionable, these are reasonable adjustments that can be made in view of all that has happened over the last few years as it relates to social justice, racial inequality, wealth inequality in this country.
Rochelle, if I may, a couple things. Homebuyer education, I mean, we talk about that when we talk about down payment assistance, but people don't think about it or talk about it until home buying is on the table. But if we're putting it on the table much earlier, let's get that education done much earlier. Housing counseling networks all over the country are trying to educate people and reach people, but they're not incentivized to do so. That is such a high volume, low margin business, and housing counselors are so underappreciated, underpaid, and under everything, right? But if we could get counseling services to people that are maybe in subsidized programs, match that up with housing choice vouchers, there's a path there to home ownership. But then you have banks that don't want to touch housing choice vouchers because when you get to the purchase component, they don't want to service that. So I mean, there's got to be incentives for banks, the people that want that mortgage business, to reach backward in the pipeline and educate, and then be willing to offer the products and the programs and service them and complete the cycle here. Otherwise, if the banks and the mortgage lenders aren't going to step up, who else is going to incentivize them to reach backwards in that pipeline and grab those people and pull them into home ownership?
Well, wonderful. We're going to take a 5-minute break to stretch your legs, but please don't walk out of the room or turn off your screens. We've got a lot of exciting information. So take your 5 minutes, meet us same bat place, and we'll have Craig lead us into our next segment.
Okay, so see everyone back at 11:05, please. And I mean everybody. Hi, are we ready to go? Can you hear me, Barbara?
I can.
Oh, good. Okay. I was getting crickets for a second.
Oh, sorry. Didn't know you were
I
talking.
don't see Michael on, but I'll have you lead off first. So anyway, thank you, everyone. Thanks for for those that have stayed off. I see a few dropped off. Eric, you mentioned how important the internet is. If you're not online, you're not in business. So it's a good lead into this next panel. And it's a bit of a move away from home ownership and more towards the opportunity to build more home ownership in rural California. I think with the lack of broadband or lack of the internet, you see a lot less likely for people to even want to move there, and therefore a lot less building going on, a lot less home ownership going on. So these next two panels kind of focus on the rural impacts of the lack of internet and also the lack of insurability of homes out there due to wildfires. And Michael will talk about the advanced technology around what he's focusing on with regards to helping prevent wildfires with technology. So the rural county representatives of California is making a very positive run towards broadband infrastructure. And for those that don't know, the rural county representatives of California actually is an affiliate of Golden State Finance Authority, and formed Golden State Finance Authority back in '93. RCRC has been around since 1972, and the board is made up of elected supervisors from 37 of its member counties. So with that, Barbara is the Chief Economic Development Officer for RCRC, and she oversees the implementation of the organization's economic development activities, specifically focusing on forest resiliency, rural broadband, and infrastructure development. Barbara's worked in the area of economic development for over 30 years. Previously, she was president and CEO of the Sacramento Area Commerce and Trade Organization at SACTO. And prior to SACTO, she was state director of the California Small Business Development Center program. Thank you, Barbara. I'll turn it to you.
Sure. Thanks, Craig. Thanks, everyone, for engaging in this conversation today. As Craig mentioned, broadband, if you're not online, you're not in business, was the quote from the session just before this one. And we want to echo the importance of broadband. So that said, I want to share my screen with you for just a few minutes. And tell me if you can see the screen that is the full slide, please. Yes?
We can.
Okay, great. So as Craig mentioned, just a few seconds about RCRC. So RCRC, Rural County Representatives of California, was started in the early 70s, primarily as a legislative and regulatory lobbying arm for a group of rural counties across the state. Today, RCRC represents 37 of California's 58 counties, not only from a lobbying and advocacy point of view, but since the early 70s, we've added a very robust and important business development arm to the organization. As Craig mentioned, that is Golden State Finance Authority. And 3 years ago, the organization added an economic development arm to the organization. And again, just to reiterate what Craig said, that economic development efforts are really focused in three, what I call industry specific areas, that around forest resiliency, reducing the risk of catastrophic wildfire, infrastructure, and we're just standing up that effort. Actually, in the last couple of months, we've really leaned into that. And then rural broadband, which is what I wanted to just touch briefly on with you all today. So why would RCRC get involved in rural broadband? Here are some storylines on the slide here. You saw how big the area is that RCRC covers. It's larger than 23 states. And within that area, nearly 51%, or a little over 51% of the residents and businesses in that area lack access to high-speed internet. It's no longer, stating the obvious, it's no longer a luxury item, and perhaps that came into sharp focus with the development of COVID a little over a year and a half ago. COVID really illuminated the chasm that exists between those that have access to internet and those that do not. And we saw it quite clearly across our rural county members. So not only as we all retreated to our homes for school and work, but more and more over these past few years, internet has become a link to how we manage our finances, how people in rural California access specialized healthcare or not if they don't have it. So it's a real, it really is no longer a luxury item. It is a necessity. It's a part of our life that's here to stay. Public health and safety is an important part of it when you're talking about rural California. You know, we have, as I mentioned earlier, we do have the risk of catastrophic wildfires across our area, and we've all seen in the news the failure of 911 outreach calls to alert residents and businesses of the approaching fire event. So we need a better system around public safety. This goes everything from, you know, putting cameras on roads in rural California to monitor driving and safety, accidents, snowfall, air quality, or first alert for fire. And then an element of our work that's near and dear to my heart is the economic development aspect of it. Broadband is an absolute asset to economic development. And I think we can all agree how this ties in to this group at a single family symposium is people who have jobs buy homes. So to have the ability for communities to attract companies into their region, create economic development, create jobs and investment is at the core of home ownership. So how did RCRC get involved? So we've been involved, that said, we've been involved historically for decades. We had a very robust and still do legislative and regulatory effort. It was largely in defensive posture, trying to hang on to what rural governments, rural residents, rural businesses could get as far as broadband. And it got chipped away a little bit more and more each year. So it was largely defensive posture. In January of 2020, again, with the advent of the Economic Development Unit coming online and really melding together the terrific talents that exist within this organization across our government affairs unit, across our business development unit, and then our economic development unit, we really focused on what we could proactively do to move the needle and to deliver broadband to rural California. And I'll just go ahead and say that this is, what I'm about to say is in no way negative toward the incumbent service providers, the big names that we all know. It's just their business model that wasn't set up to serve rural California. They report to shareholders and look for high return, and that's not always found in rural California. So we looked at different models across the United States, ways that we could deliver or have delivered broadband to all the reaches of our region. And as I mentioned, we brought in our business development unit with their expertise in financing to look at new financial models as well. We really aligned our government affairs unit with the work that we found and uncovered in the new models and new financial models. And really over the course of the last 18 months, again, with COVID, the wind beneath our wings, so to speak, we have developed a program of work under which RCRC is stepping into the broadband development arena. So this whole effort is focused on 4 key priorities that we identified right out of the chute. We're going to focus on getting fiber to the address. Fiber first is our mantra, with the understanding that fiber will not be the available delivery mechanism for all corners of our 37 member counties, but we really are focusing on fiber. Under capacity, this goes in 2 areas. One, as far as the utilization of the most future-proof technologies in our delivery of service, and also to speed. So right now, and I won't get into the details of it, but right now the threshold for speed delivery is so low across rural California. And we want to start the conversation at gig speed capacity. And I'll give you by way of example, I have a colleague here in our government affairs unit who lives in a rural part of one of our counties. And there are 3 members of her household, herself, her spouse, and her high school age daughter. They have to have 3 providers coming into their house. So they're paying 3 service providers to deliver broadband to their house, 1 for each of them, because none of the providers individually have strong enough levels of service delivery to allow for more than 1 person on a Zoom call or in a Zoom classroom. So that's what we're talking about when we're talking about capacity. Broadband for all quite simply means not only to the farmhouse, but to the farm, not only to the business park, but to Main Street. Again, as Mr. Frazier said earlier, if you're not online, you're not in business. So we want to make sure that everybody has access to high-speed broadband. And the 4th of our key priorities is perhaps the most important, is we're going to look for partners and leverage existing resources as we go forward. We don't feel the need at all to be the solution. California is a big state. This is a big problem, and it's going to require many players and many solutions. All of that being said, those are our key priorities, and our board approved a program of work that goes across these 3 levels, everything from foundational readiness, arming our counties with broadband strategic plans so they can know where broadband exists in their counties, where it doesn't, what's needed, all the way through bringing in information about new models, new financial tools, new ways of delivering broadband from players outside of California, as well as within California, those that are doing unique things and have innovative approaches. And then perhaps the third, level 3 there, is the most heady of what we're taking on, but we are stepping into, as I mentioned, the broadband deployment game and introducing a new model of service delivery. Again, this is additive. It's not meant to knock any of the providers out of the way, but it introduces a new model. So the model that we're looking at is one of open access, public benefit, municipal broadband. So if you think of open access municipal broadband as you would think of an airport, a county builds an airport, the airlines pay a fee to utilize that airport, and we as travelers pay a fee to get on the flight and go to our destination. The same model is what will be mimicked here with an open access public benefit municipal broadband model. So we will invest in building fiber to the address, and then we will invite providers, existing providers, onto that fiber network to deliver service to the customer. So what happens is you get the creation of competition. There's all of a sudden choice for rural California as to who their provider is. So that colleague of ours that I mentioned that has 3 providers paying for 3 levels of service, if they have fiber delivery and they have a choice of 8 to 12 providers, they can pick their package that works for them, their speed, and sign up, and they are good to go. So we like the open access model for those reasons. Public benefit, we intend to use our fiber to the address system to overlay public service delivery. So by way of that, in the state of Utah through Utopia Fiber, which is the largest open access public benefit system in the US at present, they have an early fire detection monitoring system that overlays their open access system. They also have air monitoring for air quality that's built into their system. Things like public Wi-Fi in downtown areas or parks, we'd like to build that in as well. And the municipal broadband is because we are a governmental entity that will be taking this task on. And I mention that because the big service providers are shareholder driven. Municipal broadband, our mission is to deliver broadband to the residents and businesses, to the constituents of the areas that we serve. So our mission is a little bit different than incumbent service providers. So I won't go into a lot of detail, but just the takeaway from this slide is that with RCRC undertaking this program of work and our board approving it, we had, again, wind beneath our wings a little bit at the end of session in June, early July, with the passage and the governor signing on July 20th of SB 156 that really created an historic investment in broadband in California. So in the budget, the governor allocated $6 billion with a B dollars to broadband deployment, focused primarily or first and foremost to unserved and underserved areas of the state of California. Unless we think that this is just a rural issue of being looked over, there are 115,000 addresses in San Francisco that do not have access to high-speed internet either. So this is a problem that exists across the state of California. RCRC is focused on solving that problem in rural areas with the help of with some of the component pieces of SB 156 that was passed. So that brings us to, why is broadband important to this group? And why are we talking about it today? And I think the reason are highlighted there in red. This is the same slide that I showed you earlier, but you know, if you are a real estate agent, if you are a lender, if you are a real estate developer, a residential real estate developer, broadband is going to be an important component of the homes that you sell or build or have in mind. So it's something to keep top of mind for the reasons mentioned here and developed early and talked about earlier. So what can you do? Carolyn told me to ask you this question, y'all. So I'm not looking for another job for everybody, but I would encourage you to stay in touch. And you can do so via goldenstateconnect.org, which is the website that we have under which all of our broadband related work as we undertake this ambitious program of work. There'll be updates on that website. All of the work will fall under this new organization that we're creating called Golden State Connect. You'll find some of the information there that I've mentioned in the bullets already resting on that website. And as we start our work toward deploying broadband, I'm sure that we will have regular progress updates through that website. And then the other thing I would just offer is, if any of you whose reach might be greater than ours at RCRC have seen or experienced unique models for broadband deployment in your course of work, we are open to and invite all new ways of looking at things. So we invite your wisdom as we move through this, as I said, ambitious program of work. So with that, I'm going to stop sharing my screen, and hopefully I've helped get us back on schedule a little bit, Craig.
Thank you, Barbara. There's one quick question. Are the resources in SB 156 state generated or federal? I'll let you answer that.
That's a good question. So of the $6 billion, $1 billion, and it's the billion that is going toward the last mile that was delineated there on my slide, is state general fund. The remaining $5 billion are dollars that have come to the state of California via the American Rescue Plan Act. So the interesting thing about the rescue plan dollar, or noteworthy thing, is that those dollars have to be spent within a 5-year period. So they have to be allocated and encumbered in state speak by the end of 2026.
Well, thank you again. And, you know, we can't emphasize enough how important that is, and, you know, how it raised to the awareness of everybody from the fed to the state level. And it was really COVID that brought this awareness. And those left behind, especially in rural areas and the school kids and what have you, it was just obviously not a good reason to have to, focus on broadband, but it was helpful. The next panel, Michael Day, he's going to discuss closed loop pump storage and how this works to help prevent wildfires and the power shutoffs. Michael is the Advanced Energy Program Development Team Lead for Train Technologies. He's responsible for leading development and deployment of microgrids and virtual power plants for Train customers. He's got more than 25 years of sales and construction experience in the energy storage and distributed energy resource sectors. Mr. Day graduated from the Naval Nuclear Power School. I won't tell what year, Michael, so we don't need to call you on your age. And Michael also holds multiple patents in the energy storage assets. So please, Michael, go ahead.
All right. Well, thank you very much. Appreciate it, Craig, and thank you for having us here today. So you start out and you say, well, what does this have to do with housing? I think it'll become apparent. Hopefully it will. Is my screen being shared? Can you see my screen? All right. So what we're going to do today is to go through flashes, fire main linked auxiliary supply, hydraulic energy storage, and closed loop in general. Talk about the economic benefits and really tie this back to what it means for housing. And it's a pretty interesting concept. So pump storage hydropower and open versus closed loop. So pump storage is something that a lot of people are probably aware of, even though they might not know it. So in California, pump storage is by far the largest form of electric energy storage in the United States. It has about a 95% market share. And that's because it can be really big and extremely cost effective. So pump storage, most people think of it like Thermalito Afterbay and Lake Oroville. So they drain part of Lake Oroville out, and then they fill it back up. If you've ever driven up Highway 80 to Reno, you see an exit for Drum Forebay and Drum Afterbay. Those are pump storage. But most of and pump storage is great. It has a very long life expectancy. It's the reason why it dominates that market space. But most of that pump storage is what's called an open loop. So what they do is they dam a valley, they dam a river, and they dam it in one spot, and then they dam it a few miles later at a lower elevation. And they'll pump some of the water up during the day or when prices are low, and then they let the water run down through the turbine when prices are high. SMUD has a lot of this in the Sierras. And it's a great concept. It's very inexpensive to build it, but it has some problems. You're damming a river valley and flooding it, and the environmental impacts there are pretty extreme. You have a limited number of places that you can put this. So altogether, we haven't built a lot of new in what's called open loop, where it's in the course of that water course. We haven't built a lot of that, and it's unlikely that we're going to be building a lot of that in the future. Closed loop is different, though. It doesn't mean damming a creek bed or a river to create a reservoir. Instead, you put a reservoir on top of a hill or down in a field, and then they're connected by a pipeline. And when prices are low, the water gets pulled out of the lower reservoir and pumped to the upper reservoir. And when prices are high, the water runs down and turns the electric turbine and makes electricity. But because it's not in the stream bed, it has a lot lower environmental impact because you're not flooding these really sensitive areas. What Flashes does is it takes that and it says, well, can we make this a modular and really widely deployable type of situation? And so you put PV panels down in a rural community, you pump the water up to the top of a hill, a mile or two away, and then the water flows down the hill, turns a turbine, and goes out to the electric grid. So what you end up with is a combination of power resilience, wildfire resilience, and new revenue typically for other uses. So this is for a project for the County of Lake that we're currently developing in North Lakeport. We have another one also in Lake County for the Hidden Valley Lake Community Services District, and we're working with other counties that are interested in doing the same thing. So the Flashes version of closed loop is fire main linked auxiliary supply hydraulic energy storage, because everything has to have a name, right? Where we differ from it is that we use tanks instead of reservoirs. So instead of having a lake or an impoundment, we put in water tanks. So it's a higher first cost, but it largely eliminates evaporation. It eliminates most of the water quality issues, and it really reduces the footprint that these have. We co-locate renewables. So instead of this closed loop system relying on the grid to charge it, we would put in photovoltaic or geothermal in the location to be the power source. And it increases the value of the plant, and it also makes it much better at being the heart of a microgrid, where it can keep the lights on for an extended period of time. And that's another one of the uses, is a microgrid. So with public safety power shutoffs, turning the electricity and communications off for broad swaths of California, the ability to keep the lights on locally is a real benefit to these local communities. And then finally, it's a firefighting capability. So it would be tied into the local fire mains in an emergency. It provides mass flow and gravity feed pressure to it. We actually, on the pipeline coming down from the upper tanks to the lower tanks, we put in hydrants out in the boondocks where the pipeline is running. So every 800 feet, there's a water supply where previously there was none. We're talking about helicopter dip tanks for CAL FIRE helicopters. We're talking about a toll booth where water tanker trucks can roll under, and you have 3 of them in a row, and they can roll in side by side and get filled up. So a tremendous increase in firefighting capability. And so it can provide, a typical system can provide 100,000 gallons of water per minute for over 6 hours. So just to give you an idea of how much that is, this is a 15-foot wide by 30-foot long swimming pool with a 9-foot deep end. So it's about a 15,000 gallon water swimming pool. 35 million gallons is one of these swimming pools every 10 seconds for 6 hours coming out of the fire hydrants. So for communities where there's an issue, where the fire hydrants can go dry and the town can burn down, this is a really significant issue. So, you know, people talk about energy storage all the time. What about batteries? Well, fire's risk, materials, expected useful life, the power quality that comes out, the amount of local jobs that are produced, the cost, all of the things having to do with this, with pump storage, are much, much lower and much more beneficial compared to electric batteries. And if you compare closed loop pumped hydro to traditional pumped hydro, it has a lot of benefits in terms of being able to be more easily permitted. So if this is so great, why is it not being done everywhere? Well, the answer is in this chart. So if you have an asset, an electrical system asset that you're selling to the grid, then what you get is you get paid on several different aspects. You get paid for capacity, energy, renewable energy credits, and ancillary services. And that's this stack of revenue. And against that, you have operating and maintenance costs, debt service, and then a profit or return to an investor, because these are structured as public-private partnerships. So the money does not come from the local government. The money comes from investors that want to build these, take the tax equity benefits from it, and sell the electricity onto the grid for the next 4 decades. And that's a really good investment if they can get access to all of the market revenue that something like this should be able to access. The problem is that the most valuable one of those pieces of that is the capacity attribute. And the capacity attribute is roughly 80% of all the profit margin. It's the largest single attribute. It's typically on the order of about 35 to 45% of all the revenue generated by an asset of this type. And because of some issues at the California Independent System Operator, there's a logjam there. You can only apply to sell capacity during a 2-week window once a year. And they're not even opening that window until 2023, and they're expecting 5 to 7 years of review time. So effectively, for a community that's looking to put these in, the ability to sell capacity is kind of gone right now. So what that means is that these projects are dependent upon state or federal grants to buy down the first cost of the project. But in return, there are a tremendous amount of benefits that accrue to local communities. So one of the benefits that accrues to local communities if these systems get installed is fire flow. So for example, at Hidden Valley Lake CSD, which is in rural Lake County, there's a development that Kimco has been trying to develop for a while called Valley Oaks. And Valley Oaks is looking to put in, I think it's 750 single family dwellings in southeast Lake County. So it is an economically disadvantaged community, and these are going to be relatively low cost by California standards. The problem is the existing water system at Hidden Valley Lake, while it would be able to provide the potable water that's needed, the water that's needed for the sink and washing the dishes and drinking water and everything else, they can't provide the needed fire flow. So the project can't get started. Well, with this system, we could have a parallel system of water mains to feed the fire hydrants. And that would allow the Valley Oaks project to move forward. And that's an extra 500 to 750 houses. The next thing is property value. Property values in rural California have just gotten hammered because of the wildfire threat, and for good reason. I mean, the insurance companies use actuaries, and it's a science where they're taking a look and saying, okay, you're in a high fire threat district, you have a limited ability, your community has a limited ability to fight this. They have to look out for their shareholders or the other people who are getting insurance through that company, and it's rated appropriately. Well, guess what? If you've got a tank with 35 billion gallons of water on top of the hill next to the town, your chances of burning down have gone down a lot, and that has an impact on property values. Another part of that is reducing PSPS de-energization. So with these systems, when the lights go out in most of the county, and the lights would go out locally, instead these systems are set up to carry the grid under a microgrid, and they can keep the lights on. So in Hidden Valley Lake, we've been talking with PG&E, out of 10 previous PSPS events for that community, 9 of them were due to electricity being interrupted somewhere else. So we would have been able to keep the lights on in that community 9 times out of 10. Well, reducing PSPS events, the number of de-energizations, has an absolute value on property. So that's a value for the people who are in the homes right now. That's a benefit for the lenders that are loaning to homes, because they don't like seeing, nobody would like to see the value of that asset decreasing. And it also has something to do with people who are trying to get into it, particularly first-time buyers who are looking to see something appreciate in value. Fire insurance is another big one. It's become very difficult in many rural communities to get fire insurance at all outside of the state plan. And while we haven't built one yet to tell you exactly how much it is, we've talked to insurance companies, and absolutely they would be able to take this local mitigation into account when they're trying to underwrite in different areas. So reducing the fire threat is the key to both increase competition and reduce rates. And if somebody can pay a mortgage, but sorry, your fire insurance is $600 a month, which it absolutely can be, that's a big impact on the ability of families to get into a home. It's no cost to local government. So the way that these are developed is under what's called energy services performance contracting on the procurement side, and they're built under public-private partnerships. So for the projects that we're doing, the local governments are choosing a partner, an energy partner to work with. The energy partner does the development work, takes the risk if the project doesn't come to fruition. And if it does come to fruition, then you have private investors paying for the installation. And incidentally, most of the time, the local governments who are giving up some land in order to get this asset put into their communities are actually getting a new revenue stream out of it. It can be targeted. We tend to target our work on economically disadvantaged communities or severely economically disadvantaged communities. And there are a lot of places out there where these can go. So it makes sense to try and target them at communities that are already facing problems. And lastly, it's widely replicable. California needs 11,000 to 12,000 megawatts of peaking capacity in place within the next 9 years. So what are we going to do? Are we going to build some giant power plants in Utah and count on the wires to bring it here? Or can we do hundreds of little projects like these that are absolutely price competitive? So it's not driving up the electric rates. It's just taking the money we already spend on the procurement portion of electricity and directing it towards something that has local benefits in terms of keeping the lights on during PSPS events and keeping water in the fire hydrants during occasional big fires. And again, there are plenty of communities in California that are low and moderate income. They're in fire country and they have hills next to them. So the Lake County timeline on this, we made it an application about a week ago to the Build Back Better program. We're working on getting on some other grants to do that buy down. We're expecting the grants to probably be in place by next summer. And then we would move to the final development agreement roughly a year from now. And then the plans would be complete in 2023, and construction would take about a year to a year and a half to get it done. And with that, I'll open it up to questions. People must want to get to lunch, Craig.
There's one question, actually now there's two. The first one, so do you need hills? Do you need a water source? So two questions in one.
So yes, you need a hill. You can deal with hills of different heights. The higher the hill, the easier it is to make it work economically, because the higher the hill, the more energy you're storing. So your pipes can be smaller, your tanks can be smaller, and that relates to a reduction in cost. But yeah, you need a hill. And with regards to the water, these will almost always be with groundwater. And the reason is that if you're taking surface water, even reclaimed water from a wastewater treatment plant, that falls under the tender mercies of the United States Army Corps of Engineers, the navigable surface waters of the United States, the Clean Water Act. The permitting process to go through the Corps of Engineers on something like this is on the order of 5 to 6 years. But if you're using groundwater for the initial recharge on it, you're not falling under those same review processes. And again, these are tanks with a lid on them. So once you fill it up, the water should stay in there unless you're using it to fight a fire or something emergency comes up. You shouldn't really have to top them up. There's actually a little bit of evaporation that happens as the tanks refill and empty every day, but it's on the order of like 100 gallons out of 35 million. So yeah, it might take 4, 5, 6 months in some cases to fill them up initially, but after that, the water is staying inside the tanks and doesn't need to be refilled. It just shuttles back and forth.
Thank you for that. There's two questions. The first one, does the community get the power?
Great question. Normally, no. Normally what happens is the investor that's put in the PV and the turbines and the tanks and the pipelines, the electricity gets generated by the sun, they're storing it and they're selling it onto the grid under a long-term contract. That's what's paying for, giving them a payback on their $50 million investment, $60 million investment to put these in. However, in an emergency, when the lights are going to go dark, what we're doing is we're working with PG&E so that PG&E can reconfigure the grid, and when the lights would have otherwise gone out, they can keep the lights on in that community, typically for a fairly extended period of time. These are roughly 90 megawatt hour storage and 70 to 80 megawatt hours of generation per day during the summer, which is when you really worry about it. So that's the ability to carry a small town for a pretty considerable period of time. So in that case, when the lights would have otherwise been out, those communities will be getting their electricity from this local hydropower asset, but they'll still be getting their bill from PG&E or whoever their local load serving entity is.
And then a double question, how much percent lost power from the PV to the new generation? And it's actually a three-part question. What will the Lake County project cost? And then is it always potable water for these?
Okay, so the first question was on your losses. So round trip efficiency on pump storage is about 90%. That's the traditional. We think that this might be a little bit lower in the 85% range. But one of the things that we do a little bit differently at Trane is that we don't convert the photovoltaic DC energy into alternating current with an inverter. We're actually able to run the pumps directly off the direct current. And so that saves some of the losses that would normally be there. So these compare very favorably with electrochemical batteries on a single day round trip efficiency. Where they really shine, though, is in how long they last. There's a great quote that came from, there's a turbine manufacturer out of Britain, and we were on a call with some engineers. And when the engineer said, well, what's the expected useful life of the turbine? And this guy, Darren Wager, said, well, we only started installing alternating current hydro turbines in the late 1880s and early 1890s, and a lot of them are still around. So it's really too soon to tell. So you're talking about something that can be used every day for decades. Water tanks and water pipelines and turbines can last, very, very long periods of time. And so one of the parts that's nice about it is that from an efficiency standpoint, instead of the efficiency degrading pretty quickly as you use the asset, which is pretty much typical with most chemistries of electrochemical batteries, with a mechanical and gravity energy storage, your efficiency is what it is at the start, and it stays there for decades into the future. So that was the first question. What's the cost of the project? For a 20 megawatt, 90 megawatt hour system, it's on the order of about $60 million, and that includes generation and energy storage. That's about where we see the prices. With material inflation, that could go up. We're still relatively early in the process, but we've done a fair amount of engineering and brought in partners. We feel pretty comfortable around those prices. And then, Craig, what was the third one?
The question is it always potable water for these?
So this is raw water coming. It's groundwater. It'll be treated. It's not always going to be potable, but it's almost always going to be groundwater, just because of the licensing the restrictions that happen. If you try to use surface water, you just get into all kinds of regulatory requirements that you just don't want to deal with. So it's going to be groundwater. It will be hypochlorinated, but it won't be treated to potable water standards. primarily because of the freshness requirements of and water turnover requirements that there are for potable water. So, you know, in the event that you needed to use this to keep the fire mains filled up with water, it's very much a, you know, in case of emergency, break glass kind of situation. It would not be good for those water pipes. They'd have to flush them out. They'd have to sterilize them, but you got to have a town left to worry about that. So if the option is that you have a wall of fire coming that could burn down your town, which is a real possibility for some of these communities, and the objection is that you'll have to clean your water pipes out for a while afterwards. That seems like a fair trade, but it is an in emergency type of system.
Thank you. And then this isn't a question, it's a statement. It just says, awesome idea, thank you. And for the sake of time, I think, Mary Ellen, why don't you take it away and close us out if you're there. Yeah, I see your name. And thanks again, everyone, for participating.
That was phenomenal. Thank you so much. I have a question, Michael. What does PSPS stand for?
Public safety power shutoffs. Those are the new de-energizations that PG&E is and the other investor-owned utilities, and not even just in California, are engaging in, where because of drought conditions, low humidity, and the desire to avoid really catastrophic wildfires, they're starting to turn off, de-energize the electric grid in times when it might spark a fire. And that's turning an electric grid that we have come to rely on into something that's much less reliable. And again, that happens it's much more likely to happen in rural communities. And the effects of that are pretty considerable on the local economy, just on living there, and on property prices as well.
Thank you. Thank you. I can just see a rush of rural communities getting on this bandwagon. It's certainly no accident that Lake County, which suffered as much as any county in the state, would be one of the first to embrace this. They're small, but they're very forward thinking over there, and they paid a high price for lack of fire suppression in the past, over and over again. Anyway, this is the end of a remarkably informative day. We reached our goal. We were the most information-packed symposium in the Western Hemisphere. So congratulations. It was a lofty goal and we reached it. I do want to thank everybody for participating in the panel, to Craig and Carolyn for putting together this amazing symposium, and for all of your participants. We've made a lot of new friends today, and those relationships are going to continue. I have no doubt about it. I've already got about 3 webinars in mind to follow up on the various aspects of expanding capacity to minority communities and homeownership and retribution opportunities. So I will like to thank again our sponsors. You've been wonderful. I'd like to thank our attendees, our behind the scenes folks, Rochelle and Becky and Sherry. It's been terrific. I will remind that most of you are signed up for our symposium tomorrow, the CAL-ALHFA annual meeting. That will start at 9 a.m. and go through noon, just like this. We'll turn it over to Wendy for some final closing remarks. Thank you again, and we'll see you tomorrow.
Thank you, Miriam.
Yes. And a last thank you to all of the speakers today that were joining us. Thank you.
Yeah.
Yes, and I just wanted to say a quick thank you. It was great to see everybody, even though it was virtual. And as Mary Ellen said, we will be live next year, but want to thank you for your support and attendance this year. And great to see you and meet our new friends, our new panelists. with a lot of information today. I learned quite a bit, and I think it was just a wonderful day. So thank you very much, and hope to see everyone tomorrow.
Bye-bye, everybody. Thank you.
Bye.